Ira Epstein of Linn and Associates with your metal market wrap-up for Wednesday, July 14th, 2021, just after 5:30 p.m. Central Time. So the event of the day was Fed Chair Powell on his first day of appearing before the Capitol Hill mob, as I like to call them. He was before the House, and he answered questions on inflation, mortgages, the housing numbers, housing prices going up so much, what's going on, and he answered them all. And I think he did a great job. What he basically said is he, and so far the majority in the Fed, that's what I got the impression of, they are still going to let the market do its thing. They're going to let inflation run hot because they think that as the markets came out of the pandemic part, and it's not fully out of it, there are concerns about this Delta virus, believe me, and the Fed is looking at that. But as we got out of that first wave, you would expect supply shortages led to higher prices. He doesn't think used car prices are going to stay up that long. It's not sticky. He agrees that labor prices, if they go up materially, that's sticky. Inflation, he thinks a pop and then settling back, as so many other central bankers do. So for the community out there that thinks that the Fed is going to move 1, 2, 3 wrong, are they discussing tapering? Yes. That he made very clear. That does not mean it's going to happen. He didn't let on when it might happen. The market, they are looking at it. They will adjust if necessary to it. They're not blind. And I think that was all you needed for the stock market to go up, for the metal market to go up. And we're talking metals here. I think he gave the go-ahead that let's get more inflation, which should be friendly on the gold market, bearish the dollar. Why? The Fed may do tapering, but they're not keen to raise interest rates. And that's why you had a big rally in the bonds and the notes today. Then you get the other element in the market that weighs a little bit. Energy prices settling back as OPEC appears to have made a deal with the UAE. It goes now for the full vote, but come on. When Saudi Arabia wants something, they get it. So that'll be a deal that is done, but that oil won't come to market until at least April. And it'll be another, they wanted 3.8 million barrels a day, the UAE, they got 3.65. So everybody wins something. All right. In the weekly area chart of gold, you're over for the week, the 18-week average of closes. You're up 1% on the week, certainly not very big, and you're up $18. When you look at the chart here, the pattern is one still of a lower low and a higher high. When I put on the moving averages, the 18-day average might be ready to cross back over on a good close tomorrow, the 100-day, so it got under it momentarily, swinging back to the upside. Where's the resistance? Well, in moving averages, it's going to be 1836.70, the 200-day average, and wherever the Bollinger Band comes in right here, you hit it. So if I want to come back a little bit to yesterday, this is Tuesday, today is Wednesday. Market stalled there, got over it today. Tonight, the market trying to back under it. If you haven't taken my enhanced Bollinger Band course, you should learn from this, all right? These are what we teach in that, and it's the enhanced course. I'll talk about it at the end of this recording. By the way, we had today a great meeting in our live webinar. There will not be one next week. You're going to have to wait 2 weeks to attend the next one. Great questions. We covered an awful lot of territory in it. As you can see up here, the market is what? Overbought. First challenge of the upper Bollinger Band, another layer of resistance, 1836.70. The market is not in the bear camp, but because the setup isn't yet bullish, it hasn't fully joined the bull camp. The silver-gold ratio still losing. Silver continues to lose to the gold. That could change if we get some growth numbers out of China, but without that, I think the market's just lagging right here. And you see in silver that it too, and by the way, look at how narrow these Bollinger Bands have gotten. It's caught now in the upper Bollinger Band to the 100-day average, back down, and under it you've got right through here the 200-day average with the lower number. This is what I call a crazy trade. Now the difference is you had an uptrend, but now what you have is higher lows, but suddenly lower potential highs. Be careful there. It wants to churn a little bit from the looks of it. Copper doing the same thing. Did it not marry itself to the 18-day average of closes? It found resistance at the 100-day average in green, support here, momentum down, just sitting on that average. Very hard market to make a trade in. You have higher lows, lower highs. It's just doing nothing. In the platinum, what do you do the first time you hit a Bollinger Band? Yesterday, this is where we were. I had mentioned, do I think the pros might have taken profit against that? You're only 60 cents away from it. They might have. Today, for good measure, the market went there, and we'll see what it's going to do. The market is overbought at a resistance zone. There's nothing bearish about the chart. It's just simply overbought. In the palladium market, you still have the embedded reading. So unless and until the red line closes under 79, the target in the market is still the upper Bollinger Band. Lose that reading, and then I think you go back to the combination of the 18-day average and the 100. Right now, the bulls have total control of this market. In the dollar index, two challenges of the upper Bollinger Band and slipping. Overbought market. It lost its embedded reading back here. It's looking for direction. The bulls are questioning now, what do they have? They have to be. We're not going to get higher interest rates just yet, so if people buy the dollar, are they buying it for COVID? There's nothing wrong with that. I mean, if you look around the world, it's terrible what is going on, and this new variant is running rampant, even in America. Even here, start reading the papers and look what's going on, especially in the states where the population doesn't want to be vaccinated. People have a right not to be vaccinated, but it's running rampant there. And now I'm starting to hear some cases that I didn't like with people that have gotten some of the U.S. vaccines and this new variant. One person saying that they got it from taking care of somebody with it. You got to be careful here. Maybe we're going to all have to go back to masks. In Ethereum, you still have a market that's drifting on the way down, momentum down, bias down, but not trending. Pattern, higher high, lower low. I look for support at 1790.25. So you put it all together, an interesting game. And as I said, one of the things you can learn, and it's a 13 video series, each about 7-8 minutes long. And it's all based upon understanding momentum, but tied with Bollinger Bands. The focus is the Bollinger Band. The focus is what to do with it when you have an embedded reading or when you don't have an embedded reading and you make your first run at it. I walk you through chart upon chart. You see what I did. You do the same thing on the charting software, and then you look for the setups. With it, you get a 14-day trial to my full computer research. That's for qualifying users. And if you're an SPF or ETF trader, you might just want to take the video that covers those, because the concept's the same on stocks, ETFs, spiders, and futures. If you haven't tried our software and you want to be able to see how it all works with my settings, you're welcome to do it, because my settings are a little different probably than yours in the slow stochastic. You'll see that slight difference. I created it that way. Not because I didn't want other people to have it. I found a better way of the mousetrap, that's all. You can call my staff, they'll work with you, or you can just go right online, and that's the way to do it. Go right up to the word education. It's all explained there, and you buy it right on the course there. Is it expensive? No. $75. It's a lot of learning, a lot that you'll be able to work with there. I'm Ira Epstein. Good to talk to you. I'll see you tomorrow.